But since we're talking about earnings, let's also address the earnings coming in from Symphony as well. In a seasonally weak quarter, the company has managed to report a growth of 35% on the top line. The margins have expanded on account of the softening of the input prices as well as the price hikes that the company has taken. But what about the summer season which is lined up? Let's welcome on board Mr. Nrupesh Shah, the ED at Symphony, to talk to us about that. In a seasonally weak quarter, you've managed to do quite a bit, but does that mean that this summer is going to be a bumper one?
No, all the expectations are like that. Pre-season sales is like that. And even as of now, in the month of February, in many parts of the country, the temperature has touched or crossing beyond 35 degree. But importantly, across the channel, across the geography, in the domestic market, there seems to be very, very positive signal.
Okay, Nrupesh, that point is taken, but you've already taken quite a few price hikes because of the volatility that we saw in the commodity prices last year. How is the pricing expected to move this particular year now? Are you likely to take more price hikes because you had done some upgradation, or we have seen the worst already?
So, of course, it seems that in terms of the input cost wise, we have already seen the worst. In all, we have resorted to about 15% price increase in the current year. However, having said that, still input cost at this point of time is higher than what it was at pre-COVID level, and still we may go for some more graded price increase. And our aspiration is to go back to original EBITDA percentage on standalone and console basis, which used to be around 28 to 30%. Of course, in this quarter, we have improved our EBITDA margin percentage, excluding other income, to almost 25.5% versus 22% last year.
What is the outlook then, Mr. Shah, when it comes to your overall export revenues, and how do you see that growing versus domestic revenue as a percentage of the revenue pie?
As far as exports mainly to subsidiaries, in United States and Australia, we are witnessing the headwinds of the global economic situation. So particularly exports to US and domestic demand in Australia are showing the weaknesses.
The stock is quite excited on account of the buyback announcement also that you have made. The price is quite attractive at 2,000 rupees. But my question to you is, the overall quantum is a bit low at just 200 crores, and the acceptance ratio given the market cap becomes a lot less. Could you talk to us about the thought process around the price that you have set and the total quantum?
So the buyback value and volume is decided as per the SEBI guideline, which allows maximum 25% of the net worth. And hence this was the maximum permissible amount. And in addition to 200 crore, about 50 crore will be outflow towards taxation and other expenses. Essentially, out of our net worth of 800 crore, 250 crore will be reduced, which will ultimately be reflected in much better ROCE percentage, RONW percentage, and also EPS accretive. And we are sitting on a treasury in excess of 600 crores, so we are well placed.
Okay, Mr. Shah, we'll let you go on that note. Appreciate you joining us on the show. So quite excited about the prospects of the coming summer season. The initial channel inventory does suggest, and the demand coming in from the pre-season sales is also something which is suggesting a bumper summer 2023. But shifting focus to the decision coming